No, I've been buying businesses and stocks for a lot of years, stocks for 71 years and businesses for almost as long. And I've never really made a decision based on macro factors. If I find a business I like, I buy it. I mean, the first stock I bought was in the spring of 1942, and I will tell you the macro factors were not looking good. You know, we were, it was that right after Pearl Harbor, and we were getting clobbered in the South Pacific, and the war did not look good. Now, I think almost every American thought we were going to win the war, but when I bought my first stock, I went in 100%. I spent all my $120. I was not doing it based on headlines. I was doing it based on what I was getting for my money.
But when you did that, when you bought into it, and you say you don't look at macros, I can think of times in the past when you have looked at macro effects. When you looked back with stocks at a low, you told Americans to buy stocks with both hands.
Well, occasionally, stocks are just demonstrably cheap. I mean, really demonstrably cheap. And I wrote an article in 1974, or I did an interview with Forbes, and in 2008, I wrote an article for the Times. And I mean, there are occasionally when they're just ridiculously cheap, but most of the time they're good value. But there have been a few times when I thought they were so cheap that I should say something.
You know, people have pointed out, obviously, stocks have come a long way since then. People have been analyzing your annual report and realizing that you didn't really say anything like you've said in years past, where you said at one time a few years ago that stocks obviously were a much better value than gold. This time, the excerpt that you put into Fortune a few days ago that people have been really focusing on had two examples that were both around real estate. One, the farm that you bought here in Nebraska. Another, some real estate that you invested in just across the street from NYU, from New York University. And that has people speculating, do you think that real estate in other areas are better places for money than stocks right now?
No, but they're speculating wrong. I use those illustrations because I don't know that much about real estate or farms. And yet it was still possible to successfully invest in them. And I feel the same way about people on stocks. You can have a great lifelong experience in stocks and really not be a specialist in accounting or know all the ins and outs of capital structures and all of that sort of thing. And I was probably more ignorant of the realities of farming, the realities of that building in New York than most people are of stocks. And yet it was perfectly possible to come to an intelligent decision that you could not lose money in those investments and that you were probably going to make quite a bit of money.
You know, I wonder that because there have been a lot of people recently who have raised questions about the stock market, who have worried that it is a fool's game to try and get involved, that the average investor can't get a fair shake. I've heard people like Bill O'Reilly say this very recently, that he doesn't trust the stock market and thinks it's rigged. What do you tell people?
Well, well, it isn't rigged at all. I mean, there have been occasions when given stocks perhaps have been rigged, but it's pretty hard to rig $20+ trillion. I mean, and people should forget about it, calling it the stock market even. I mean, it's American business. And if for some reason you think American business over the next 50 years is likely to be way less productive than it has been in the past, then you could come to a negative conclusion on it. But I came to a conclusion on that farm that it was likely to produce a little bit more over the years and that the crops would bring a little bit more over time, and I bought it on a 10% yield basis to start with. So when you're buying a productive asset, you don't want to categorize it by some name and then read in the paper that this or that's going to go up or down. You want to look at the business. If you bought the house next to you to rent to somebody, you'd look at the rent you were going to get, the taxes you were going to pay, and what you thought the neighborhood would do over a long period of time, and then you'd measure that against the purchase price. The purchase price is all important, and the stock market just offers you so many opportunities. Thousands and thousands of different businesses. You don't have to be an expert on every one of them. You don't have to be an expert on 10% of them even. You just have to have some conviction that either a given company or a group of companies, and I would suggest for most people it should be a group of companies, you have to have a conviction that those companies are likely to earn more money 5 or 10 or 20 years from now than they're earning now. And that is not a difficult decision to come to.